easily add like 6 months of experimentation on top of it before you sort of get momentum. And then you need another 12 months growth. I think if you start thinking about like the outcomes, then a lot of founders are almost like ignoring the momentum and the continuous momentum that you need to hit like these numbers. And that's why a lot of seed companies are running out of time. They too late realize how many months of exponential growth you need to hit that million or the 2 million maybe.
Today's episode is about a take that most investors tend to disagree with, which makes it an extra juicy one. Why founders have to invest in marketing from the start. Building a marketing engine takes time, and starting early is the only way to have a reliable growth engine by the time you need it. Arguing this is Paul Veugen, a serial entrepreneur and investor, with whom I'll dive in on how he's building up a marketing engine at his latest startup, Detail, that enables everyone to share their story with video faster. Prior to founding Detail, Paul started and led Human to an acquisition by Mapbox, did the same with Usabilla that was sold to SurveyMonkey for $100 million in 2019, and he also spent time in a leading function on product and go-to-market at Color that has raised close to $500 million from the likes of Koshla, Initialized, CRV, and General Catalyst. With that, welcome Paul. It's wonderful to have you on. Today's topic is a great one. You cannot invest in marketing too early. There's a lot of people that disagree with this, especially investors will tell you that you should not invest in marketing unless you have strong product market fit already. So tell us why you think it's essential to invest in marketing as early as possible.
I think doing this again, so this is the third company that I'm building. There's a lot of things that are easier, but the hard things are still incredibly hard, even if you do it for the third time. And figuring out how to do marketing while building a stellar product. And I think both of those go hand in hand. But doing excellent marketing and finding the best ways to draw the attention of the right people just takes forever. And scaling that to the magnitude that's interesting as a business, especially as a venture-backed business, just takes time. And I think you should start early, very early, learning about what works and what doesn't work. You should start early to find your voice and figure out like sort of the best team members on your team to make that happen. And at the same time, you're building your product. So I think building product and investing in marketing, and that don't necessarily mean investing tons in performance marketing. However, sometimes that might be a way to experiment as well. But most of all, just invest in learning about marketing, learning what works, figuring out the channels that help you grow while you're building your product.
You strongly disagree with not investing in marketing until you have product market fit because it takes too long, right, for marketing to properly ramp once you start to actually invest in it. So maybe dive in a little bit and unpack on kind of the reason behind starting early and the length it takes for it to actually ramp up and why it's too late to only start to think about marketing when you actually do have product market fit.
Yeah, and it's interesting, right? So it's very common to get advice to not invest in marketing until you have product market fit, and that's almost like a sound bite. I think that advice is, to me, like as a founder and also as an investor, I think that's very frustrating and could be really bad advice to an early stage startup. And it's nice if you are building a portfolio of 100 companies and only 2 or 3 of those need to succeed. And if you're willing to take the chances, or if you have the network to power this. But for most companies that are very viable, like massive businesses potentially, investing in marketing is a great way to find product market fit as well. So you cannot find the whole market part of your product market fit. You need to find your market. And it's an illusion that you sort of ship your product and people will start banging on your doors to use it. Some part of it, yes, and early traction and finding early traction in your market. And for some markets, it's definitely different. But in my personal experience, investing in marketing and building like some skill of channels and finding your voice at the right places. So growing like early marketing channels, growing early social media accounts, doing small tests with performance-based marketing, even before you have product market fit, will help you validate what you're doing. And you need to have like some sort of critical mass early days of people like coming in through the door to try your product, and ideally the right people. And finding the right people very much is positioning. And building a great product is also very much positioning. So I think when I think about building very, very like 0 to 1 products, the earliest days, I think marketing and go-to-market is a critical component of that. And what I often see, and also in portfolio, having invested in a lot of early stage companies, over I think 40 directly involved now, seeing founders struggle with that topic is often because they are not investing enough mind share in early go-to-market, and they are too focused on just doing product, and sort of it's almost like hiding for the actual challenge of doing the marketing side. While it's a big part of building a great product and having those conversations, customer discovery, so just like you're doing customer discovery potentially, I see marketing and early go-to-market like experiments also as a way to do customer discovery. And I think if you invest in that, and if you start investing that almost on day one in positioning, in brand, in like ideal customer profiles, and experiments with your channels, experiments with your messaging, you'll learn a lot more about your product and what to build and how to build features as well. And it also helps you prioritize things in your roadmap, because there could be, for example, features on our roadmap that are attention grabbers more than potential like hardcore value features. So we're balancing features that are incredibly valuable to our users with sometimes features that are primarily based to grab the attention, and they're not always the same. And especially in today's era with AI features and such, these attention grabbers are, for example, great drivers for new users. While they discover a product through an attention grabber, they stick to the value, stick for the value that we offer them through other features. Those types of things you would only be building if you also start learning about marketing, the positioning, the messaging, and what resonates with your users in the outside world, not so much for just the users that already came in.
That's fascinating, because I think common wisdom is, and people in general understand, and I think we as a venture firm have a thesis as well, that nailing distribution even earlier is more critical than ever before. But most companies, at least that we work with, the main thing that they do is trying to focus on outbound sales and trying to do a lot of founder-led sales, try to get in front of as many customers as possible and do a whole bunch of the discovery work. Marketing is still very much an afterthought during that stage, because it's just with so many things going on, it's not something that a lot of folks prioritize, because they're not necessarily struggling with enough top of funnel, right? Because as long as kind of the idea is still novel, they're still small. Kind of outbound sales tends to be, and networking your way into different customers tends to be more than enough at that point. Why is that?
I actually disagree with that part as well.
Exactly. Perfect. That's where I wanted to go. So why is that not enough?
I think it's sort of, especially also as an investor, I see everyone struggle with these outbounds, right? We're no longer living in an era where there's like, when I started Usabilla 15 years ago, which was this like voice of customer SaaS product. So we built usability testing tools, and that later became voice of customer. We started in an era where there were no such tools. So we were the only ones that offered these types of tools for usability experts or user researchers. So there was a vacuum that we could fill, and there was a lot of like pull from the market. So if I would reach out and I would start sort of doing outbounds, doors would open. I would get invited based on like a random blog post on like a Dutch blog, and I would be invited to booking.com to share to user research team how you could use our product. In today's era, that team actually is seeing probably like 60 tools a year or per month, probably even, that should help them improve their workflows and make their work in their life easier. And they're completely numb. So I think to cut through the noise, you need to start making you need to start thinking about sort of how do you actually bring those things together. And I'd rather have you reach out to me, or have you already heard about the product that I'm building before I do my outreach, than sort of trying to do cold outbounds. So I think in that sense, sort of building this momentum and building this presence in the ecosystem, building presence in the lives of your customers, whatever your product might be, is just incredibly important. And if you start building that early, just like if you're doing large enterprise sales, you're also building like on two sides. So you're building like strategy around like press and analyst relations, and you're doing outbounds, and you're investing in performance marketing, and you're doing retargeting of any user that might have visited your SDK, and you send out newsletters. I think as a startup, early days, you need to try to build out some of those channels as well. And you need to figure out, you can't afford to build out all those channels, but I do think it's important to invest in the bandwidth on your team. And that doesn't mean like a full like marketing team with all the different folks that you would see at a large enterprise organization or the different divisions. But I do think that you need to have bandwidth to execute and learn about messaging and learn about channels. And if you do that early, I think there's this notion that it's waste. I actually don't think it's waste. So if you start building and investing in a channel early, even if I will make a pivot, then starting from scratch, as an example, social media. So let's say that I want to build, in our case, we're more like somewhere between business and consumer, a TikTok channel. Before my TikTok channel or my Instagram account has critical mass, I'm like months, I'm investing for months. So consistency on that channel for months in a row. I'm posting like daily or weekly, a few times a week. And only after a few months, you'll start to see like the impact of that and with serious numbers. So even if I would make a full pivot, that channel with like the first 1,000 or 2,000 fans, or maybe 5,000 if you're lucky, or maybe 10,000 if you were really lucky, those 10,000 people at least help you to avoid the cold start problem when you start something new. Even if you're unless you would do a complete pivot into a very different industry. And that's, of course, happens as well. But what I've often see are that's like it's sidestepping. It's like it's a shift towards something else. And there's definitely relevance in the channels that you build up as well. And the same goes for the newsletter that you build up, to the momentum that you share with your customers. And I think the stuff that you're doing to keep early customers engaged, which I think also falls under a bucket of investing in marketing, like proper customer flights, keep making sure that they keep getting reminded about your product. Most people that come through the door, unless you're very lucky with your first product, most people that come through the door will leave. So if you have like a proper activation rate, that's typically still the majority of customers or the majority of people who showed early interest will fall off. So you're doing all your effort to get like early attention, and then you just ignore what you start to build up. And I think investing in that portion, like investing in getting enough people through the door, nurturing like early customers, keeping them engaged as your product rapidly evolves, and that's marketing. It's a big part of, at least on our marketing team. I think that is going to help you a ton to share like the progress that you're making as a company and the value that you offer to them and future customers.
I think another statement that stuck with me that you said is, few companies forecast accurately, especially early on. What does that have to do with marketing?
Well, I think we spoke about this also in the context of how long meaningful numbers take. If you, let's say that you're a seed stage company and you know that you need to hit at least a million ARR to be a serious contender for Series A. That's like one of the goals on your radar. If you start with 10,000 K MRR, which is like the starting point, then you need like very strong growth month over month to hit that 1 million in 12 months. Right. And I think I did the calculation, if I'm not mistaken, it's 20% month over month. So every month you need to grow 20%, and then you're almost hitting the million ARR in 12 months. If you think about a seed investment with 12 to 18 months of runway, typically, and if you're lucky, maybe 18 to 24 months of runway, that means that you need to grow, right? And that growth can come, of course, from outbounds, early customers, and expansion. But I think marketing in most cases is fueling a lot of that. And lifecycle marketing also within your existing customer base, re-engaging customers. And that's a lot of work for an early founding team. So even if you have a very well-rounded team of founders, where one of them would be like on marketing, or has more bandwidth to take on these types of things, then it's still a lot of work. So I feel in that sense of getting some foundational, also core team members in place for marketing and customer acquisition, customer journey, Could be Jack or Jane of all trades, but it needs to be you need to invest. And I think before you find the right people, before you're on that track, before you start building the channels, before they're actually starting to find their voice on the different channels, the different positioning, the messaging, and you're months ahead already. It's not like instant gold that you'll find. So easily add 6 months of experimentation on top of it before you get momentum. And then you need another 12 months of growth. So I think if you start thinking about the outcomes, then a lot of founders are almost ignoring the sheer the momentum and the continuous momentum that you need to hit these numbers. And that's why a lot of seed companies are running out of time. They just they too late realize how many months of exponential growth you need to hit that million or the 2 million maybe.
The very common wisdom is it doesn't matter how long it takes you to get to your first million. It only starts to matter how fast you get from 1 to 3 and then from 3 to 10 and so on. But that said, kind of in summary of what you said, you have to start to put these pieces into place well before you hit your million. Otherwise, you're probably not going to get there in a predictable way. And then especially afterwards, once time really starts to matter, it's very hard to just flip the switch and start to grow more predictably if you haven't laid the foundation of that.
And I think
before.
Predictability is a good one, right? I feel like my job and as a seed stage company is to find predictable ways to grow my product. And so I want to have channels that I can control that are not based on, let's say in our case, we're on the App Store. I could pray for Apple to feature us, but it's not within my control. A little bit, but up to a certain level. So I need to find repeatable growth channels where I have full control. And we did that through investing a lot in different channels. So we went slightly wider with all kinds of different social media channels. We're investing a lot in content. We're experimenting a little bit with performance-based marketing and paid, mostly as an experiment to learn about the cost of acquisition more than the volume of acquisition. But by going slightly wider, we were able to identify 2-3 channels that work very well for us. And even while we have those 3 channels, we're already looking for 2 others. So we're already we know that there's opportunity on LinkedIn, for example, with video. So we're making video software. I want to invest in LinkedIn because I feel like there's momentum on LinkedIn and a lot of untapped potential for us as a company to build a channel out of that. And we're investing in YouTube as the main channel. So we quickly discovered that was our I would say our winner within 3-4 months. And same goes for TikTok. But the only way we could discover the winners and identify the winners by going really almost brute forcing our way to success on some of those channels. So out of the 6 channels that we tried, 3 of them resonated and performed best. I likely would have missed out on 1 or 2 of those if I didn't go a little bit wider initially.
Which is a fantastic segue, right? So I think we've understood that it's important to invest in marketing early on, as early as possible. Now, all right, how to actually do it? If I'm sitting here, I'm thinking about starting a company, or I've started a company, I'm working on the initial product. How do I? So you mentioned going pretty broad, but if you're in the shoes of a founder, or maybe make it very tangible and kind of take us back to when you guys just got started, how did you go about? I think what resonated is, right, you have to go wide and test different segments. How did you go about that part of the kind of kickstarting the marketing engine, testing things and going pretty wide as part of that, despite very limited bandwidth and resources on the team?
Yeah, I think the number one is we invested in resources, right? I invested in getting at least a strong marketing hire on my team as one of the first hires. And I've done that previously as well. I think one of the challenges with marketing in general is that marketing playbooks don't age well, have a very short shelf life. So the things that worked very well for me 15 years ago, they can't be replicated again. The way we rose on the App Store with the second company that I built, a human fitness tracker, that was in an era that the App Store looked very different. And the number of apps was probably not even 10% of what we have today. And the way Apple would select, even the App Store homepage looked very differently. So I can share like my best practices on how I've grown a human out of nothing. But that's not relevant for a founder today. So I think if you think about your marketing cycles and sort of, there's a lot of like best practices being shared by others. And even the stuff that I'm sharing now is probably not relevant for you when you get started. And that might be frustrating, but it just means that you need to experiment. You need to invest, you need to learn, and you need to get sort of very sort of goal-oriented, you need to tackle this problem very goal-oriented. Sort of what's the outcome? What do you want to tackle first? In our case, that was, I want to get repeatable acquisition. As in, I needed to grow my like inbound, like incoming user base. In our case, a little bit more like downloads from the App Store. I needed to be able to control that because I couldn't rely on Apple. I was invisible in the App Store. I need to have enough users coming through the door with an interest in video creation. And this, like the types of videos that we make, reaction videos and video podcast. And I need to go after that segment, those two segments first. By doing sort of what we started doing was, what are the common problems that were best to solve? So we identified like in like the feature set, we tried to come up with like very specific problems that you have when you think about video. As in how to record a video podcast with just your iPhone, how to record a reaction video in 30 seconds on iPhone. And those are actually search terms. So we started investing in like video production. So we have a team of about, there's 3 people on our team, 4 people on our marketing team, and they're together about 2.5 FTE now. So 2 full-time people working on marketing for our 14-person team. And even before that, I started making videos. So I started investing my own time, sort of producing these types of videos. And what we initially did, sort of, I would get like 1 thumbs up from my mom and maybe one from a sibling. And I would be like 50 or 60 views, which is wildly frustrating. But that's the up thing about a channel. As in, building a channel from scratch is just an echo chamber. But by doing it consistently, in our case, we did it also to use the product and to talk about our product and to become better at explaining what we're doing. Bit by bit, those videos actually got better. But also we saw as the content catalog that we were building up became almost like an SEO channel. And so we invested in sort of early video production because video was native to what we're building as a video production app. We started doing that at scale. So somewhere along the way, I remember that we had like 50 videos, or we had about 20 videos over the course of a year. And I pulled the team back together and said, well, if we want to do this, we need to actually invest in this. What will it take to do a video a day? I said, we're going to fill these channels. We're going to brute force it. User problem connected to a solution in our app. And that's just an example on how we build a channel. So we invested in like building 5 or creating 5 videos every week, putting those out on our channels, different types of channels, YouTube, TikTok, some on Twitter even, posting snippets on LinkedIn out of the videos. And then bit by bit, after about 2 to 3 months, we could reflect on the metrics and we could see what resonates. And that's how we made these videos better every day. So for us, it was like sort of, you pick a channel, you invest heavily, not just a little bit, but you really double down on that channel. We try to sort of duplicate it, use the same work across some other channels so you can benefit a little bit more from the work. So let's say Instagram and YouTube together. And then reflect on the metrics, improve. And then after about 2 to 3 months, you can start drawing conclusions. Funnily enough, most marketing channels take at least 90 days. So it's really hard to draw get factual results after 3 months. But we did see that our videos get indexed about 40 to 90 days later. So we had like, out of the 10 videos that we produced as an example, only 2 started becoming like, we call them like the sleeper hits. And they start building up momentum over time. And they were the gifts that kept giving. So every week we would get more views on those videos and they would start stacking up. And after a year of investment, we were able to sort of, out of these channels, so TikTok, YouTube, a little bit on LinkedIn and the App Store, we built 20 to 40% growth month over month. So every month we can grow 20 to 40% based on the channels that we fully control. And we control them because of the output that we do. We're not relying on the cost of or the budgets of other apps. As in, on the App Store, as an example, if you buy your users, then you're competing with Temu, you're competing with CapCut, ByteDance, and a lot of others. So even if it works well today, if they sort of increased our budget and they shove a few million into the App Store to run ads, then suddenly your channel is destroyed. And so I think not being reliant on a single channel, trying to own the channels that become the growth drivers for us are important learnings.
That's fascinating and a lot to unpack here. I think the first kind of overarching theme is experimentation, especially before you know what's actually working. But you kind of said you have to build up an engine for experimentation internally early on. And speaking to folks kind of from the marketing and growth world, they all say it's a lot about running experiments and trying to figure out as quickly as possible which ones work and which ones don't, and double down on the ones that do. However, that's a little bit in conflict with the fact that it does take 60 to 90 days or even longer to get true signals out of it.
Yeah.
And that's one of the biggest trends. So how do you think about experimentation and picking up early signals and continuously forcing yourself to keep running experimentations within that world of limited knowledge and data?
Well, to be frank, I think that's one of the hardest parts of building a company, right? It's the same on the product side. And then sort of mix in some hype. So if you're lucky, you get these like shark fins. So there's like a lot of, let's say, do big product launch and I'm wildly successful and we sort of double our user base overnight with very early days. Now you're looking at like distorted metrics. So you don't actually know what happened there. You don't know how actually excited people are about the product that you built. So I think that's the main channel. Same goes for like the marketing channels. There's a lot that I would have discounted. And maybe we, along the way, discounted some of the things, right? We had pauses on YouTube, for example, where we invested all this time and we looked at our metrics and we just didn't see like the volume that was meaningful enough for us as a company that needs to grow 20 to 40% every month. So I just didn't see the impact of the channel yet. And I think that was a big mistake because in hindsight, only when we started analyzing our metrics, like let's say 6 months later, we looked back and suddenly there were these videos that were just taking off. And those were videos that I almost discounted. And maybe if I might have wiped the entire channel already, right? But those videos about how to make a reaction video in 30 seconds, it's an actual example. It's a video that I made on my family break in Spain. And I had just like 15 minutes before we would go out for lunch, I recorded the video. We posted it the same day. And that video 2 years later was still bringing in thousands of views every week. And in that first, like, I think if you look at the chart of that video as an example, I'm very sure that the first 90 days were pretty much flatlined. And I wouldn't be surprised if it was like the first 120 days that were flatlining. And that's why sort of along the way also, I think I'm trusting also more on intuition in this case. So we have hard metrics that we follow, and there's a lot of like we set very clear goals for our team as well. So we just know that we need to grow 20% month over month, and 20% acquisition means 20% ideal if the funnel is stable, 20% revenue growth. That's the goal. And if you work backwards from that, then we know that we also need to grow our channels with approximately the same volume. So the number of views, the reach, the videos, and there are multiple ways of doing that. We can do that by making more successful videos. So every video in itself should perform better, or we do it by making more videos, or we count on the long tail. So the videos that we're producing today are actually relevant in 6 months from now, potentially. So for us, it's a lot about like sort of daring to make the long-term investment while at the same time measuring short-term success and knowing that not everything that we're measuring is actually completely like sort of, that's not always like absolute. And I find that hard as a founder still. There are probably a lot of decisions that I'm making now today and that we're making as a team today about where we invest our time didn't make sense if we look back in 2 years from now, and others did work out. So in that sense, it's maybe not much different than investing, right? So that early stage bet that you're placing, it's maybe more about investing in the winners instead of being afraid of investing in the losers.
It's one thing to say you run experiments. It's a very different thing to actually or continue to keep pushing yourself to run such experiments. And so how do you and do that right kind of consistently over time in a methodological way? Tell me a little bit more about how you're internally thinking about building such an engine for experimentation internally and consistently execute on that.
Yeah, I think for our team, I'm leaning on my team here, right? So we have like a really awesome team that's doing most of the hard work. One of the challenging parts is that with our team, we're often you get into like a stable mode, or at least to keep it healthy for everyone in startup life, it's fucking chaos. But you're also trying to search for some sort of stability, as in like finding rhythm and cadence in what you're doing. And just like we're doing that on product, we have like daily releases, weekly releases. We're pushing really hard on features, and sometimes there's a bigger thing that takes like a few weeks. I think on marketing, it's a little bit the same. I'm trying to balance being hands-on as a founder as well and being hands-off. So I'm trying to find a good mode where our team owns, and also the same our marketing lead, how she's owning parts of the work. What we're now doing is, as an example, we got into the stable mode. Things worked very well. We hit our numbers for like 12 months in a row. But then I felt like I think we're stagnating, right? We're at this there's the traffic is shifting. We got featured by Apple in the App Store, best app for iOS 18. Traffic doubled. Everything is different. So suddenly there's like new inflow that we didn't have to do ourselves. So we also have to rethink about which channels are important and shuffle things around again. So now it's total chaos again. And instead of owning that, I own bringing the chaos and helping set like clarity on the goals and helping direct some of the channels. So I think these are the channels where we should be placing our bets. These are the customers, like the segments that are most important right now. And this is our product, how our product roadmap lines up with that. Once you have that, that's the picture that I need to sketch out for our entire team. I need my team to be very in line. Everyone needs to be aligned, mostly you can never get the full context out of, I can never get all the context out of my head, but I need to try to make sure that my team has the same mental model, approximately, at least to do their work, of what we're building, why we're building it, and for who this is relevant. And I think that lands on me. And as a founder, I need to take a lead in making sure that and there could be other founder of your team, but in my case, it's my role. I need to own that. And some periods where I step back a little bit and I let the team run with it, then when you see things change, you have to step back in again, take that control a little bit, help the team understand like that mental model and give them the context from like the broader picture for the next 12 months or next 18 months, and then let them own it again. And what we've done on our marketing team as an example, we just gave out the channels to each individual. Like the individuals on the team that are successful with those channels, they own their channel, they own our metrics, and they roll up to the collective. And that makes them you see them being passionate about hitting the goals. And each channel has a goal. As in it's some channels are new, like LinkedIn, it's early channel, well, absolute numbers are still low, different goals than TikTok, where we know the ingredients, we know the recipe, we know how to make like viral videos now. So they own their channel, they come up with like the plan to hit our growth numbers for the next few months. And then as a team, we brainstorm and we support that.
I want to shift gears on that topic, but maybe one more question here, which is, right, when you first start putting stuff out there, to your point, try to get a thumbs up from your mom and sibling, and that was it. A lot of people get discouraged by that, partially because of the fear of looking dumb in public and not getting kind of validation and seeming like they're not a success because no one reacts to whatever they put out. How much of a hurdle was that for you to kind of overcome and get comfortable with that?
You see me smiling, right? I think, but even like sharing these types of insights, that I how I personally try to build like a company, right? So there's some level of discomfort here because I'm far from who am I sharing these types of things and telling other people. I'm first of all never telling anyone how to do things. I'm only sharing what works for us, right? And I think it's a little bit the same if you sort of put yourself out there and record. I think video is even more like awkward in that sense. At least for me personally, I remember sitting in front of a camera the first time to do the first release video for detail. And my personal pet peeve with video startups is that they all make their announcement, their release videos in After Effects. Sort of, if your product is good, then just use your product to build that launch video. You cannot use like After Effects to make a release video for a video product or video feature that you're shipping. So I sat in front of that camera, I was talking to the camera, and I think I did like 20 different takes. And there was someone else, sort of Frank, our video person in the room, and that even made it worse. So there was no way that I would be able to record that. So I really had to get over that. And I think after a while, by keep doing it, I'm almost able to separate my discomfort and my like self-awareness from like sort of, I completely turn it off. And I think one of the things that helped me is having other people work with me. So I started recording videos and someone else would edit them. So I didn't have to look back at it and watch it. And it's like a very sort of, I was lucky that I have folks on my team that can do that. But you do have to sort of almost like have no shame in doing this. And just like you should have no shame as a founder to pitch everyone who doesn't, or no one wants to hear about your company in the first place, right? So you really have to you have to give it all if you want to be successful in that sense. And if you don't share, then you will never find your audience. If you don't sort of share what you're passionate about and what I deeply care about what I'm building. I'm really enjoying what I'm building. And if other people judge me for my excitement for the stuff that we're building, well, that's not my problem. And I think you really have to sort of just rub that off and let them. You don't have to watch this. I'm not forcing you, but if you watch it, please give me a thumbs up.
I will. Before I started having conversations like this, I also said the last thing that I want to hear is my own voice. And I cringe every time I hear my own voice. But the alternative is not being able to have these type of conversations. And that wasn't on. I did not want to do that, and so you just have to force yourself.
And it gets easier. I think a lot of it is just by sort of I think I personally got comfortable. I still feel like sort of some awkwardness with some things that I look back and then I would be way more critical. But it turns out, and that's I think another important realization, is that the things where I was most unsure, or the things that we produced the quickest, sort of fast little like almost like internal content that we made, just a video that I shared with my team to demo something. And then one of my team members from marketing asked, "Hey, can I put this online?" And I said, "Well, if you ask, then yes, you don't have to ask, just put it online," right? Some of those videos actually did very well. So it's not about making it super, I think it's way more about authenticity and often the right keywords or the right topics that resonate, especially if they're a little bit more niche. They have more likelihood to be discovered in the long tail if you get a little bit of index. So for us, a lot of the videos that are a little bit more like almost like low, I would classify them as lower quality or quick and dirty. It's sort of videos that took 20% of the effort but make 80% of the volume. And I think it's very interesting that you have a high bar for sort of, we initially had a very high bar for everything that we put out. We lowered the quality bar in terms of like production quality and sort of all the stuff that actually doesn't really matter. And we focused on the story. So we started focusing on the keywords, the messaging, the structure of the videos. And when we started doing that, and we started producing videos almost like we had as an example, we have a marketing meeting where we just call topics, and then sort of someone just takes that topic and produces something with it. And those topics are based on user needs. And I think it's in that sense, it's almost like a product approach. How you be building features or how you build a product team.
Can you give an example of some of those topics and how that translates into videos.
Yeah, I think a really concrete example is how to record a podcast with 2 iPhones, or how to record a remote podcast on iPhone. And we sort of discover like the keywords. We see that there's search volume on YouTube. So we start with a little bit of like keyword discovery. Then we write a video script or a video outline that touches the most important themes, including the keywords. And we bring the solution, or we show how you can do that in detail. So a lot of things that we've built, our biggest problem with detail is that we've made a lot of things very simple, but there's just so much that you can do in the app and no one knows. And I think our sort of way of sharing that is by just going after like very concrete problems that people have. I want to find a solution for which microphones work well with an iPhone is another example. And we just give them like easy to digest, short or mid-length videos that give them the solution while gently introducing detail or just directly pushing detail.
What I also want to
call it keyword bingo, by the way. So it's just filling keywords.
That's awesome. Or this part of, I guess, the experimentation engine. I think that the last kind of topic I want to make sure we dive in on is also the topic of positioning, because that's a very important piece of figuring out your marketing early on, is also figuring out your positioning, which can be incredibly hard. So if you don't really know yet who you are 100%, or as you're still trying to figure that out. So how do you think about positioning, both kind of at the start as well as then as the company evolves over time?
Yeah, maybe taking it a little bit further out of detail as well. Yeah. When I look at decks, sort of when you're judging investment propositions, and you get like investor decks and the seed investor, you're seeing a lot of decks, right? And then there's a handful that just stands out, like a small percentage that really stands out, that sort of really honed down like their core propositions. So sort of why does this matter? Who are they, and why does it matter? What's their perspective on the world? And I'm typically looking for what's your unique product insight combined with what's your unique market insight. So what do you know about like sort of your technological innovation and a unique way of tackling this, and why is this really hard? And then what do you know about the market that others don't know? And I think if you combine those, somewhere in the middle is also where you find your positioning, right? And I think positioning very early days, you often see like a company comes in like pre-seed or seed stage, and they took the effort to sit down and position themselves in that slide deck, as an example. Especially the ones that get funded, they typically have a more than average slide deck. So they were better at positioning themselves than a lot of others, either in person or through introduction, or because they typically also a good deck. And then you start figuring it out, and you almost forget to look back at that. And if you're lucky, if things go up, then sort of people go into fundraising mode again, and they start doing that positioning exercise again, and they make their deck. And a deck is not always the same positioning as your customers, because customers are typically a little bit more short term and like sort of here and now. Although I would argue that early customer positioning also can be very aspirational. And sort of there's the value that you have today, and there's the thing that you want to be for them in general. And it's a little more like esoteric, like broad scope. So what we're trying to do is sort of value now, but also big picture. At the same time, every product feature that we're building towards making that more real. And Mark's sister investing in dots, or investing in lines. Investors invest in lines and not in dots. So it's like a chart that you draw over time. You meet them multiple times and they start drawing the line. So every dot on the graph, and you see progress. I think for customers, it's roughly the same, right? And again, to the point why marketing is so important, you start investing in this line with your customers as well. So early attention, they come in, they're excited, but they miss quite a few key features. And those features, like 6 months later, might be in your product. And the same goes for external people that are paying attention. As in they might follow your social media account, or they saw about you on TechCrunch a little while, or you did product release and product hunt. And then 6 months later, there's this progress and there's this thing. So your positioning is actually what brings that all together. It should be like something that helps other people understand what you're doing and why it matters. And product features fit into that as well. So every feature that you ship should sort of amplify or sort of make that positioning stronger. And I think it's important to sort of if I think about our marketing and how I bring the chaos in our marketing team and then sort of bring back structure again, that mental model that I just described, that's very much the top part of that is positioning, right? So if I help with like a positioning statement, who we are as a company, or making video creation easier. We go after long form on mobile, which is counterintuitive. These are the customer segments that we're doing. So bit by bit, I'm boiling it down, and that context needs to be refreshed every now and then. So also for new team members, for existing team members, it's evolving, it's changing. There are things that we tried on macOS that sort of didn't scale as fast as we wanted. And there are things that we're trying on iPhone. There's channels evolving. There's messaging that evolves. So it's really important to create snapshots of that, repeat that back to the team, and repeat it back to your users, to your customers. So our homepage is a reflection of what we're doing. It updates every, let's say, 3 to 6 months. There's like a small revamp. It's constantly evolving. Our App Store screenshots are constantly evolving. The message to our users are slightly evolving. The taglines that we're using are slightly evolving. But we do sort of, it's not always like sort of continuous. But there's definitely moments that we just look at it and we say, fuck, this is no longer really covering well. Right? We're missing like sort of these things that we introduced are actually should change the narrative. When we started on iPhone 12 months ago, the only thing we did was dual camera recording. So 2 cameras. Now we have a full-fledged video editing app that can compete with CapCut. So we need to sort of evolve, and sometimes we forget that we change so rapidly, those ship so fast. And you actually sort of need to step back and do that again. I think one of the challenges that I see in this is if you're rapidly evolving, is that your customers get these snapshots and some people still think that Detail is an app that turns your iPhone into a virtual webcam for macOS, because that was the first thing that we shipped. It's like our opening our opening act on macOS. And then it sometimes takes quite a bit of effort to almost update our mental model. So you need to sort of push out and make a lot of noise about that.
We back a lot of strong technical founders and then strong product founders. And one of the major challenges and kind of where we get quite involved is that positioning is very much an afterthought, with the belief that a great product will solve a lot of the problems that you have on the sales and marketing side. And that unfortunately really isn't the case, or hardly ever.
I also think it works the other way around. I think great positioning can also drive product, right? So I think sort of sometimes you're building things that will help like find your wedge into the market and sort of your uniqueness. So sometimes, it sounds very counterintuitive, but I do think there's like features or things that you're investing in that actually just have strong positioning power. So you might prioritize those things over other features that also have great value, or maybe sometimes even slightly bigger value on the temporary scale, just to help you draw the attention of your users.
Can you give me an example of that in your case?
Yeah, a good example for us is a lot of AI features. There's a lot of things that make your life easier that are attention grabbers more than that they're not the most used features in our app, but they definitely grab attention. So we have, for example, a script writer in the app. So if you use the teleprompter to record a talking video with a script, there's an AI feature that helps improve that script, and it's a great attention grabber. In the onboarding, it helps people to get started quickly, but most of the time, once you've run that once, there's a lot of other features in the app that are way more powerful and see much higher usage, like text-based editing, or selecting short clips out of a video by just selecting the sentences in your in a text overview. Those are harder to explain, harder to market. They're not as magical per se, but we use some of these magical features to draw the attention of people, like automatic short clips, voice enhancements, and other things. Day to day, it's not what actually drives the usage in the app.
So I wanna take a quick step back, right? We've talked about a lot of things this is your third rodeo after 2 other companies that you've done previously. What were what was maybe the major learning or some of the major learnings that you had and potentially also surprises along the way? Again, not being a first-time founder, where you learned a lot about a lot of things that you didn't know yet with the third company that you're now building.
I think I deeply underestimated how long it takes to build channels and how long it takes to build that's why I'm so vocal about like the investing in marketing. Maybe I did the same with the previous companies. So I think for Human, we didn't invest enough in marketing. So we grew only through the App Store. Like Apple is sort of putting us. We were everywhere on the App Store, best of App Store or whatever. So all these like accolades from Apple that helped us grow, but without them, there was no growth. And that sort of, I think that's one of the reasons why I'm sort of so adamant on investing in like sort of building your own channel. I want to be in control. And so far that helps. So it still have to sort of, we're far from like a home run success, but we have control over our destiny. And I think what I underestimated, even while doing that, is how long it takes to build up a channel from scratch in today's era. When you started Twitter 10 years or 15 years ago, it was much easier to grow an audience. When you come into Instagram today, unless you pay up, there's almost no organic reach for a brand in the early days. So it's really hard to get some of these channels off the ground. And once they start moving, once you discover like the recipe almost for your account, then it's exponential and it works very well. But that first, like the first almost like flat line of that curve, that I found wildly frustrating. And I think it was slightly surprising. I wasn't expecting it to take so long before we would see any momentum, right? And there was this almost like this messy middle, wildly frustrating messy middle where we tried a lot and where we sort of were experimenting a lot, but the numbers were just not getting meaningful yet. And in order to make a channel, as an example, meaningful, it just needs to have some volume, right? If you get like sort of, it's a funnel. So if you look at through that entire funnel, it needs to have volume, because otherwise you only have like one user coming in at the end of it. And I think that was, for me personally, doing it again, I think I maybe underestimated that a little bit. So I'm glad that I'm through that and we see like the impact and I'm very confident about what we're doing. But I think there were a lot of like long periods of time where if we would have had this conversation a year ago, maybe, then I would definitely not be confident about my investments. I would be very sort of probably very insecure about the current state.
Knowing how long it takes for established platforms to take off, do you guys take bets into experiments with new emerging social platforms? Because there's all these popping up all the time.
Yeah, I think it was, well, not every, so I try to sort of stay focused. But for example, I think Threads is like a unique opportunity. LinkedIn is a unique opportunity for video. The platform, the massive platform shift with sort of, I gave up on X pretty early because I just, for a lot of reasons, I just don't think that our future, I don't want to invest there. I don't feel like it's the growth channel of the future for us, at least. So we shifted our attention from those platforms quickly to Threads, LinkedIn. And I think some video platforms could be interesting as well. For us, TikTok just works very well. So I feel like sort of I'm trying to combine like focus and at the same time have some loose experimentation here and there. But I think in the same realm of marketing learnings, like I think also as a like product discovery takes long. Like finding good, strong product market fit in an actual relevant, large enough market also takes, typically, unless you're lucky, takes long as well. And I've seen that now 2 times, and this is the 3rd time. Only now we start to see like the impact, and we're like 3.5 years in. I think I underestimated that part as well. I thought sort of we would be able to reach that faster.
There's also about a lot of kind of up and coming new like consumer social apps and everything that tend to, some get to very strong traction out of the gate and then eventually flare out. Are you monitoring that world as well and kind of investing in those? Because being an early mover pays off in case they actually take off, or is it a little bit too far outside of what
No,
you're
I
currently
think it's
doing?
too far. I don't think we can, as a team, afford to learn there. It's almost like sort of being able to be on it. I think our team is currently in a very nice shape where everyone has their like the thing that works for them, and they found their recipes. Like, so they have their ingredients in their recipes and they can repeat it. So we have finally got to the stage where we can create repeatable growth on some of these channels. I think I personally have an appetite to experiment with a lot of those things, but currently I don't have the bandwidth. So I have no bandwidth to invest in that and to absorb myself into it. Maybe a part of it is also that I'm just completely fed up with a lot of these things. I just don't enjoy them anymore. And I'd rather listen to a podcast or just sort of have a handful of like folks that I follow that I enjoy seeing. So maybe it's a little bit like a swing of times as well. I'm very curious about just in general, like the media landscape feels like you have 10-year cycles, and we're definitely on the verge of a new cycle. It's going to be interesting. As an investor, I'm not investing in consumer social, but I do think it's a very interesting era. Let's see.
That's a great segue, right? Because on top of being a founder, you are an investor too. How has being an investor helped you being a founder this time around?
I think every conversation that I have with founders, I'm also maybe reflecting a little bit on ourselves. I think the conversations that I would otherwise also have with founders, because you're building your network and I'm investing in the things that are close to me, right? So I'm trying to sort of just narrow to the world that I daily operate in with detail. And that makes it easier to be an investor, but it also gives a lot of inspiration and learnings about what we're building for detail. So it works two ways. And I think for me personally, it's the best hobby that I can have. It's a very like inspiring way to spend spare time, limited spare time. I think it's a great way to think about what drives growth and what makes success and what works well and what doesn't work well. I try to stay away from like telling other people how it works, because it doesn't work like that. There's only one person in the room if you're meeting them who actually should figure it out, and that's the founder. Even like the advice that I'm sharing now is not relevant for 99.9 others. And that's, I think, being on the founding side really helps to sort of have a little bit more humility when you walk into a meeting and understand that it's up to them and that they need to bring up the energy. I think one of the other things that helps is, in the end, the most important thing that folks can have, or that you can bring as an investor, I think, is of course like network and introductions. But it may be even more important is just making sure that others don't run out of energy. And if you suck out like energy, in however sort of intentional or unintentional, that's actually actively hurting your performance as a VC. So I think the most important thing that you can do is just taking care of the team and making sure that you bring energy instead of take energy. And that's what I'm trying to do as an investor, and also how I picked my own investors on the cap table with detail. So we only have folks on the cap table, thankfully, doing this again. Thankfully, that bring energy, and that's also what I expect from them. Right? If they don't bring energy, that's totally fine as well. But then don't waste my time, and we'll have a conversation later, or I'll send you an update. And then I'm even great respect for each other. But if you take energy instead of bring energy, then we will have a different conversation.
A few more kind of very quick questions before we wrap up. Outside of your advice that you have to invest in marketing as early as possible, is there another popular advice that is often given to startup founders or operators that you personally disagree with, and why?
I'm not going to burn my fingers on this one. I will.
Please do.
No,
yeah.
I think there's a lot of it's an interesting one. Like, I think just product market fit in general, I find like a wildly complicated term. Not sure if I could say a lot meaningful things about that. I think it's often misunderstood what it feels like or how you get there or how you don't get there. I think one other one is a minimal viable product and the way you iterate your sort of iterating your way to success. There are almost like two schools of thought, right? Sort of like talking with a customer and doing these small incremental steps. I personally am more interested in like the big bold vision type founders and companies, so the folks that have really strong understanding of their market and like what makes them unique in that space, and then work their way towards that. And then sort of like an early, like a minimal viable product is often not super relevant. So you're testing, I think with a minimal viable product, folks often test like just one ingredient. And if you ask me if I like carrots, sure, but if you depends on how we're going to eat these carrots, right? So you can sort of give me one carrot and sure, then sort of he likes carrots. But it doesn't say anything in the context of what you're trying to achieve in with that big bold vision. So I have a love-hate relationship with the concept of like minimal viable products and everything around that. I think there are a lot of types of things that just don't really have like that minimal viable product, and it's almost impossible to validate. And even validating it is like a useless exercise because you're testing like a piece instead of like you're testing the individual component instead of the full thing that you're trying to put together. And sometimes it takes a longer time and effort and deep investments over a longer period of time before you build something that's actually would fit that classification of a minimal viable product that you can validate. So I just, whenever that word comes up, I'm becoming a little bit itchy, and I just don't really know what to do with it, or how to think about it.
Right, we only invest at the very certainly pre-seed rounds. We put a lot of emphasis on founders and their learning velocity and execution velocity, kind of the broader market and idea they're going after, but we're putting very little weight on the actual idea at the start and what that looks like, because more often than not, that's going to very meaningfully change given how early we actually invest. We don't want to be too married to the fact that that's a company we're underwriting, and that it's going to stay that over the course of time.
Yeah, but I do I think what I'm looking for often is sort of your ability to execute towards something bigger and turning that into smaller pieces, right? Sort of and that's why I'm sort of, I think the love-hate that I have with like a minimal viable product, sort of, it's more, I'm thinking more about this as stepping stones, right? But I do want people to have like a perspective on like the ecosystem and the time that they operate in, like sort of how does the world around them evolve and how does this fit in, right? Sort of you can't ignore sort of, I don't like being overly focused on competition either, but you need to bring something truly unique. And then we go back to the positioning again. I think that's sort of the core part. That's it's an MVP or minimal viable product in essence. It's just an oversimplification of the actual world or the bigger thing that you're trying to do. And if you focus only on that, it becomes much, if it would only be that, then my question is often like sort of, okay, but why are you validating? What is the goal of validating this as a minimal viable? Because then we still don't know anything about sort of like direction. I'm more interested in direction, just like you're saying.
I can clearly tell you're very passionate about this.
This
specific topic.
You asked for it.
I can tell. Right, and kind of, if you just had to make one statement about something that you tell folks in your network that are thinking about starting a company or have just started one, what's kind of the one piece of advice you give them outside of what we discussed already?
I think just prepare for a long ride. I just sort of, this is going to be like an endless expedition, and you have to enjoy that. If you don't, then it's not good. It's sort of, most of it sort of, I'm enjoying this, but if you think this is going to be like a fast, quick thing, I don't think that it works like that. And I think where you make the difference is typically when things get really sort of, when they have taken a while. So you make the difference sort of, or just at the start, right? Sort of, but for a lot of like at the end of your runway for a seed stage, or when you're trying to raise a Series B, or when you pitch to gazillion investors and you have your early prototype or your concept and things start only then, when most people actually call it quits, when most people run out of energy, when most people are just done with it, that's where if you enjoy that part, I think you'll have a unique advantage. And if you can continuously share, like bring that energy, I think that's where you make the difference. Usabilla, the first company that I started, technically should have been bankrupt probably 2 or 3 times until it wasn't, and it sold for 100 million to SurveyMonkey, and that was like the effort. First 4 years I did, and then the CTO took over. He spent another like 6 endless years just building the business out of just brute forcing the business side of the house, and that eventually led to a great exit. But when he took over, there was like, at that point, we probably had like 11 months of runway, 10 months of runway, and they needed to make it happen. They needed to break even. And he worked towards a break even in 4 months and made it happen. First 4 years was even more terrible. I think I didn't get a salary for most of the time. Human, same, until we got acquired by Mapbox after about 4 years, which was typical talent acquisition, but a good outcome for everyone involved. Out of the 4 years, that was 2 years just on fumes. And the team kept going. They took another job and then we got selected by Apple as best of App Store in 2014. And suddenly we had 100,000 downloads in one day, and the sky was the limit. So a lot of these things you need to build up in parallel. You need to build up your brand. You need to build your product. You need to build up your learnings. You need to find the best team members along the way. And then suddenly things start clicking, and they come together. And you have these moments where you think, oh, fuck, we're actually onto something. This is magical. And that's a different skill along the way. But you do need to be able to bring up that energy and keep going. And I think that's where you make the difference as a founder as well.
The last thing, just because I'm always curious to learn through your eyes about this for my own job, without kind of names or anything, what's the most impactful or thoughtful thing an investor has done for you or a business you've been involved with to date?
So I send out monthly investor updates to my investors, mostly also as an exercise for our team. So I assume that half of the investors might or might not read those. And we do like a short video. Then there is one investor who's always I know he's always reading them, or they as a team even. And he sometimes shares like a quick note in return. Don't necessarily need that. I know he's reading, but he just pays attention. And I know that there's something in there that gets he's using that to find the right people for us. All right. So he's always just on the back burner, just how can I be helpful? And then when he makes the intro, it's the best intro that I can get. As in, the other person has been fully briefed. They have details on what we're doing, why it matters, and etc. And I walk into the room, and it's actually first of all, that intro is always coming true. They're always accepted, as in it's always double opt-in. And but the people that I'm meeting are excited about meeting me at that point. So half of the work is already done before I walk into that room. Because they shared relevant context, and because they have the relevant context, and they do that at scale, like significant, like hundreds of, I think 200 companies in their portfolio or something. I'm always wildly impressed that they can, right? So that they been able to almost build that shadow track for each company and open their Rolodex in a way that actually is helping me. There's a warm intro. And then there's the warm intro where the door is open and the fireplace is crackling type intro. I'm always getting those from them. I think that makes them really special to me.
I couldn't agree more. On both sides of it, right? The power of keeping people in your network up to date and stay top of mind for them. And writing investor updates is a great one for that. And then the other side of it as well, right? The power of paying attention and showing people that you care. And even if it's not a big effort, that some of these small things can go a long way for someone on the other side, which is a great place to wrap. Thank you so much for coming on, Paul. I learned a lot today and had a fantastic time.
Thanks for having me. This was fun.